everybody. Hello, Eagles. Everyone doing okay? I just wanted to show you guys something. Yesterday, I spent a lot of time in the afternoon on Twitter looking for guests and people to bring in to edify the community to keep the schedule going. And yesterday afternoon, you know, we have our webinars here at a certain hour, but it's arbitrary. I mean, we do it because this is a good time. We catch the news at half past the hour. People in Europe, it's easier for them to join us, but I just wanted to show you guys something. And I did make one mistake, and I promise I won't do it again. Okay, so, you know, I'm out here, I'm looking for guests to build the schedule, and I'm also scanning markets while this is going on. We're going to have Lydia Idem Finkley. So what a great day to have her with what's been happening with the pound. But I just wanted to show you here. So it was this tweet right here. I saw the pound diverging on the 1 and 4 hour TF stretched out, third drive to a top possible. Prices closing under 9.5, false breakout signal. So the thing that I did wrong was, instead of just tweeting, because I know a lot of you don't follow me on Twitter, is I didn't go into the chat room for subscribers. And I promise anytime in the future, anytime I see something like that and it's good enough for a tweet, I'll come into the room and share it. You know, no one's ever compelled to act upon anything that I see. But I guarantee you, when I see things after hours, I'm going to come into the chat room and share it. Is that a deal? Give me a Y if it's a deal. Okay, we're getting a delay. Anyone else getting a delay on my language? And yesterday I was talking about Aussie not making new highs, putting in failing rallies. It did so. We've come off. Look at what we're holding right here. So normally when I see a 200 holding on a 4 hour like this, we could get a bounce from here. But I think eventually after a bounce, we're going to take out this 200. And we could trade down to 78.80. And it is turnaround Tuesday. So very possible. I know it's a broken record, but perhaps we're going to get some type of turn in the S&Ps. It's just been pretty amazing what's happened here. I want to point out, even though we've had some huge moves, the Russell still hasn't, or just barely eked out a new high with the blow off that we have going on. And if you do trade stocks, guys, you know that this is a darling. Okay, so I'll come off track a little bit and talk stocks. So everyone knows what NASDAQ's been doing, blowing off, parabolic. Check out Tesla, which is one of the darlings for a long time. And we're not making higher highs than Tesla. It almost looks like a failing rally in Tesla. So if you like the car, fine, drive it. I wouldn't own the stock here, because what's wrong with it? Why isn't it over 390 making new highs with the rest of the market? So I know a lot of people love the technology. You can love the technology and love the car. Doesn't mean that you have to still love the stock. I'm not saying it hasn't been a home run ball over the years, but you know, this is a classic example that I also use in currencies, that when a market isn't doing what it should do under favorable circumstances, what's going to happen if the bid comes out of the market? The weak will become weaker. Everyone with me on that? I'd be looking to sell rallies in Aussie, and Aussie is weaker than Kiwi, so Aussie Kiwi looks negative to me. Alexander Doran, nice to meet you. I'll let Steve cover the pound CAD. And, you know, I want to make another comment. You know, we have Stelios Contos here, and he's very, you know, he's not brash. He's very humble, but you know, he never gave up on his stance about being bullish of pound, which, you know, has been right. He also said before the end of the year we'd see crude over $60. So the only thing he's looking for that hasn't manifested in spades has been silver. So, you know, it's not always the loudest and most famous and the guy who talks the most or talks the fastest. That sometimes it's the quiet guys that are not out there seeking attention that have great ideas, and it's great to have Stelios on the team. And he cares about each and every one of the subscribers here, just like Steve Volge and Blake and the rest of the team. So that's basically what I see for Turnaround Tuesday. My point on the pound was it shouldn't close back under 9.5. We're right here, right? So this 9.5 was a big level, right? At a top here, at a top here. It has the potential of becoming a false breakout. Now the Dixie can't get going, but I can't, you know, it can't get going. It's still sideways. So it's possible that the Euro's going to lead the way for a few days, and EG will correct. But this Aussie has made a few lower highs, and it's sitting right here on the 200-day on support, and I think 78.5. We've had a tremendous move, maybe even back to 77.60. So those are my thoughts coming into today. We have a great guest, Lydia, stepping in for an open slot, and she'll be talking about cable and all the crosses. And I think someone asked about that. Okay, cup and handle on pound CAD. Gee, remind me. I'll ask Lydia to cover that when she does the pound against the cross of commodity currencies. Okay, so stick around for her. Good morning, Blake. How are you, my friend?
Good morning, Dale. How are you?
Good, buddy. So EG, did it get to the target price?
No, it actually it hit my invalidation because I moved my stop. I'm actually still one of the, well, whoops, I didn't want to do that. Hold on really quick. You probably see every screen of mine. Let's see here. Let's go back there. Okay. One of the things that I can't do, and we can't do as an organization, because you know we're not giving buy, sell, or hold recommendations. We're just we're illustrating, you know, patterns as they develop. But I moved you know, our invalidation level lower to a profit target, so it's profitable. But I'm still holding, you know, half of my core position. So in other words, I'm still short, but it invalidated it in a profit, which is fine, because it's not going to go down or up in a straight, you know, in a straight line. So and the invalidation.
Yeah, it was just a way of protecting the pattern.
Exactly, but ultimately, I'm still expecting lower levels in the euro pound. The flag itself, or the ABCD, really points to about 87, 80. I mean, it could go to 87.30, 87, depending on, you know, how volatile things get ahead of the ECB. But you know, overnight the ZEW numbers came in, you know, strongest numbers that we've seen for quite some time. I think since 2015. So the ZEW numbers were very, very positive, the German numbers, and that boosted the euro up to a point where it spiked up and then reversed. But overall, you know, I think the theme for today is the tariffs that Donald Trump's slapping on China. Now, it may only be on washing machines and solar panels, but China exports a lot of solar panels here to the U.S. and it's like a 5-year tariff. You know, so and it's gonna.
Now, you talked about this and said that, you know, it was something that you thought was going to happen. So, you know, sometimes things start, you know, like a flood starts with a leaky pipe, you know, it's just leaking, and then, you know, as time goes on, the leak gets bigger until it becomes a flood. So maybe he just opened the spigot by doing this.
Right. Well, the trade wars, if you will, you know, are starting, and that's something that, you know, it's taking notice in the Aussie. Now the Aussie's down at channel support, just so you guys know. But if you use like ForexAnalytix last night, the out in Asia, the Aussie was noted as it was breaking through this minor trend line, and you know, here we are, you know, probably about 30 pips lower, and now challenging like channel support. But you got to watch the Aussie, because as you pointed out, if the Aussie starts moving lower, I mean, we could trade towards 79 pretty easily, and that's, remember, we're extremely overbought in the Aussie dollar, and it's been a straight up move since beginning of December. I mean, we've gone 6 handles in the Aussie dollar higher, and for us to come off and come back and retest like 79 cents, it makes a lot of sense to me. You know, and I think the dollar is poised for a little bit of a bounce, but the question is, you know, how far is it going to bounce, and is it going to be too aggressive of a bounce? But I think this news overnight about the tariffs are probably making, you know, the Asian bloc, or, you know, Antipodean currency is also a little bit more sensitive. You know, if you look at like the Kiwi, for example, the Kiwi posted a new high overnight and then reversed. All right, and that is that's something that, you know, you've got to notice as a trader. Is like you know, it took out all the stops above the highs, and now, you know, we're coming off a little bit. And if risk aversion picks up any steam, if turnaround Tuesday ends up being, you know, a little bit of a pullback in risk, you know, we could end up seeing you know, some weakness in the Aussie and the Kiwi moving forward, you know, especially over the course of the next maybe, you know, a couple of days. I mean, you got the Kiwi dollar that could come through, you know, 72.70 and start trading back down towards 72 cents, especially that we took out the highs and reversed. The pound is also pretty weak. The pound, after brushing 140 overnight, which has been a big target, we're coming off here in the pound, but the pound still looks relatively strong. I mean, it's come off a little bit, but we're not seeing any significant pullback. I think what I'm going to be looking forward to is Thursday. You know, the ECB is going to try to talk down the euro dollar, but I don't know how much more they can really hide, and how much longer than they can really hold back and not tightening up monetary policy a little bit. So you know, I think that if the euro dollar gets like a pullback, let's say 121.50 or maybe 121, you know, it's probably going to bounce from there. And if you're looking at the cable, you know, the cable might get dragged down to 138.50, but the pound's in breakout territory too. So I think you gotta use, you know, this dollar bounce as an opportunity to sell strength if we get it. And that would be my thoughts going into Thursday, which I'm really looking forward to. Thursday is that day that I'm probably going to look to sell some dollars on a spike up if I can, if get it. I don't even know if we're going to get it. I mean, I may be completely wrong, and you know, Mario Draghi might come out completely hawkish, and the euro dollar races to 125 and leaves everybody in the dust. You know, who knows? But I think that a dollar bounce is coming, and we're seeing it through, you know, we're starting to see, you know, the Kiwi dollar showing a little bit of weakness, the Aussie dollar showing a little bit of weakness as well, and the dollar Canadian's firming up, the U.S. dollar Mexican peso is firming up as well. A little bit of reversion is sprinkled into this too. I mean, you know, as the market came off a little aggressive at the end or during the European North American changeover, we saw some, you know, the stock market give back all of its, you know, gapping up gains. It is weighing a little bit on some of these pairs. You know, speaking of which, I want to go back over and talk about. I want to talk about the yen pairs, like the dollar yen. Okay, so overnight, Kuroda was relatively dovish, and the dollar yen spiked up to 111 and change and reversed. And you can see we've actually broken lower out of a triangle now in the dollar yen. And I put on a pattern in play because the break of the triangle actually put, you know, it targets below 110. But I'll tell you regarding the dollar yen, the major support comes in at 110.15, and if you don't know why that's such major support, that is the 618 retracement of you know, this spike low back in September to the spike high in November. It's the 618 retracement, and it's holding up relatively well. But if we break through that support level at 110.15,
we could go the big triangle that you had.
Yeah, I mean, you know, we could break below 110, and it looks likely stocks continue to show some weakness here. The risk of a move lower in the dollar yen is quite high, and a lot of people attribute this weakness that we're seeing in the dollar yen on the failure above 111 overnight. Remember, this is the BOJ decision was last night. Kuroda's press conference, he was extremely dovish. And the dollar yen, you have to imagine what it was doing last night. I was sleeping when this happened, but the dollar yen spiked up into the 111.15, 111.20 level and failed miserably. And that has allowed for a lot of selling in the dollar yen. You know, people just got frustrated and got out of it overnight as it collapsed. Now, the risk is that if stocks feel a little bit heavy, and I don't think that we should take this this news about trade you know, lightly. I think it's something that the market is taking notice of today, and as you pointed out, I think aptly, that you know this little leak could turn into something a little bit. You know, where there's smoke, there might be fire. And you know, you take these trade sensitive countries, whether you're talking about you know, any of the Asian countries, or you're talking about, you know, Mexico, for example, and you see the Mexican pesos under some pressure today, they could really, you know, continue to come under a little bit of pressure, and you know, yen would strengthen as a result, as you'd see some repatriation back into the yen. So I think that, you know, there is a viable risk, and I think if the dollar yen starts working into new lows for the day, we have to start being aware of the possibility of a test of the 110.15 level, which I think is going to be really key support. Really key support, you know, for the market, because if we break through 110.15, we're probably gunning the stops below 110. Then stops are got to be pretty plentiful down there below 110. I would imagine that the market's immediately going to start searching for that number, and it's the risk. I think the risk is that, and we don't have. I think we have Richmond Fed today. Richmond Fed Manufacturing Index, really nothing aside from that's going on today. So I think the market's really going to be focused on how equities trade, how the yen trades, and see if this dollar has any life. And the dollar index, again, it's still trading so heavy, and until it gets above 91, I can't imagine there's going to be any meaningful bounce. But if we break through 91, I doubt it's going to be today. I think it's going to be more like, Thursday. We might get a spike above 91 as the euro comes off, during the ECB press conference, or maybe, following the ECB meeting or something like that. But I don't know if it's going to be sustained. But I think that the risk is, that the dollar is going to be kind of choppy around here, and how the dollar yen responds today is going to be very, very key. And like I said, the Aussie and the Kiwi, those currencies are at risk after having such a nice move over the course of the last 2 months. I think they're at risk of a possible move lower in those. Now, I don't want to talk too much about the pound pairs because we do have, as you point out, we have Lydia coming on. Steve might talk a little bit about the pound crosses, but the pound crosses actually look pretty well bid, and I don't want to be dismissive about those, because I think the cable still looks pretty good up here. Despite its failure at 140. I know there's going to be a lot of traders, Dale, that are shorting the cable here with stops above 140. I think that's the trade du jour for most FX retail traders right now. It's like, okay, well, what's my risk? I mean, it is manageable. I'd agree that if you shorted the pound, you know where you're wrong. But is that the right trade right now? I mean, the pound's got a lot of momentum behind it. I'm sure you would agree with that.
Yeah, it's probably more the euro for downside corrective, where you'll get more bang for your buck.
Yeah, and it's interesting. You look at the euro dollar, and the euro dollar has been holding up in this triangle pretty well. And I think if we're going to see any dollar strength come on, the euro dollar has to take out this right. 122.10 level. If we take that out, then we may, yeah, but at the same time, I'm looking at the dollar, and the dollar looks like crap. And the ZEW numbers last night out of Germany, those are pretty strong. So I don't think we should be dismissive of those numbers as they came in last night. So Bill asks, what do you make of the weekly RSI divergence in the euro dollar? It's pretty big. It's massively divergent, but let's talk about this for a second. The euro dollar, and you can see here, it is divergent. I'm going to pull down this relative strength a little bit. It's divergent as we see it. Okay, so you got a relative strength not hitting new highs, but price hitting new highs. What is the other option here, Bill? Okay, what is the other option if the euro dollar rallies? Well, let's say the euro dollar from where we're currently at goes up to 125 or 126. Is it possible that the euro dollar relative strength breaks out too? And then, reverse it. Yeah, it is. That could absolutely happen. We could have the euro dollar spike above 125, and maybe the euro, this relative strength breaks higher, and maybe we just match these recent highs or come in a little light just below it, and then reverse. It's all very possible. So I don't think you can be dismissive of the euro right now. Now,
since RSI is my bag, and that line that you had up there for Bill, what I would expect, and before I'd even consider shorts for positions, would be, you get a little pullback from here. This is drive 2 up here. It's only your first divergence. Never, your first divergence might be a reason not to be long anymore, but it's not a reason to get short. So if we do get that pullback after the ECB, then I'd be looking for one more high. And then if you have your second divergence that would be more bearish and more compelling for a short. So a pullback from here and then one more shot up, and you want to see the RSI under 70 on that third drive.
Yeah,
that's my best guess anyway.
And here's the other way that I would look at it too is let's say, okay, we all know this is the breakout point, so there's no like if and or buts about it. It comes in. Actually, I don't like that pen color. Let me erase that and grab a black pen. That's probably going to be a little bit better. Okay, that didn't work. Pen color black. Grab pink. Okay, so let's say the euro dollar does something crazy on Thursday, and then the euro dollar breaks through this 121, that breakout point. You see it right there that I'm drawing? Okay, if the euro dollar breaks through 121 and starts heading lower, then what's going to happen is this relative strength, it will show divergence. It'll start heading down, and that's my trigger that, oh, this is a failed breakout, and then I need to be short the euro dollar, because right now it's not showing that to me. Right now it's signaling that hey, we're moving higher, but still relative strength can still break out if price continues to break out. So I don't want to put the cart before the horse right now.
There's no signal. It's not a signal.
Yeah, but it is, and I have to say, Bill, it is worth noting. It's not something I'm dismissing at all. It is divergent as we speak, but I think it's, like I said, if we get below 121, like let's say that Draghi, turns around on Thursday and says, we're going to see quantitative easing as far as the eye can see, and we're never going to exit, loose monetary policy, which he's not going to say, but let's just say he does say something like that, and the euro dollar does a complete about phase. That would be a real big trigger to me that it's time to short the euro, because I know positioning is very long the euro. I know it's very skewed. I know the sentiment is extremely uber bullish, that I think that the euro would be in for a really big move lower, and maybe we get a move like that. Maybe Draghi is much more dovish than the market expects. Excuse me.
Good eye, Bill. Very good eye.
Yeah, very good eye. Okay, and with that being said, I'm gonna pass it over to Steve. Good morning, Steve.
Good morning, Blake. Good morning, Dale. Good morning, everybody.
Thank you, Blake.
My pleasure. Steve,
yes, mate.
Remember, we got Lydia coming, so don't steal too much of her pound thunder.
I don't intend to go over the pound pairs. I'm pretty sure that Lydia is going to answer questions about them and have a look at them all.
Great. All right, you guys have a great trading day. Thanks so much for listening in.
You too, buddy.
Okay. Bye-bye, Blake. Have a nice day. Bye-bye, mate.
So what's on the radar here, Steve? You make anything out of this Aussie break? It's second lower high.
I'm still short, although I reduced my position last time we dipped, because it's a counter trend position. But we haven't. I have the same. I've been watching this channel for a long time, and I have the same channel. For me to have confirmation, today is a very nice day, no question. And I really find important the fact that we didn't break above the highs of the shooting star that we posted on Friday. That's also positive if you're looking, for a correction to start. But I do want to see this ascending channel break to the downside before I get more enthusiastic about it.
All right, nice picture.
So it's the right place, it's the right time for this thing to roll over. But we need to see a move, a daily close, let's say below 79.50 roughly, to get confirmation. In which case I would be looking for at least 79, at the first attempt, and perhaps lower than that at the second attempt. Obviously, the structure of the move lower is going to tell us if it's corrective, which is a high probability given the extent of the move we had higher, or if it's something different, it's more impulsive. But anyhow, that's what I'm monitoring, and to be honest, I would really want to see the Kiwi rollover as well. The Kiwi did post a new high. Yesterday did post a new closing high. I mean, you know, since we started moving higher. And today we also picked above this resistance area. So in theory, what I was expecting yesterday, that I said that, you know, Kiwi is telling me that it wants to make one more high, perhaps towards the 78.6. You know, this has been partially satisfied, so we did get a new high. Didn't go all the way to 78.6. But, you know, to be honest, to also believe in the Aussie reversal, I would also want to see some, you know, some signal from the Kiwi as well, because I don't really believe, I mean, no matter how much they might end up diverging, I don't believe that one of them can be really moving lower and the other one staying at the highs or even pushing new highs. They can overperform or underperform each other on occasion, but not really move in opposite directions. That's something that happens very, very, very rarely. So it's not something that I would, you know, take into account as a possible scenario. Obviously, everything has a little chance of happening, but, you know, you always have to try to trade with, you know, high probabilities, not very low probabilities, right? So it's going to be interesting to me to see that today's high was a high in Kiwi. I'm still doubtful about that. I would, you know, since we breached above there, I would ideally want to see, you know, a move towards the 74 area. But as I said, Aussie looks good for today, and let's see, perhaps Kiwi rolls over as well. Regardless, both of them should give us at least a corrective move, you know, pretty soon from here. In the case of Kiwi, I would be looking for a move back towards the 72.30 area. In the case of Kiwi, you know, 79 at the very minimum, probably below that after perhaps a small rebound after testing 79. Now, having to do with the USD yen, I know that Blake covered that, but I have to remind you that I was viewing this as a potential head and shoulders. So, you know, we retested this, we're moving lower once again. As Blake said, once again, and this is not the first time, the market completely dismissed the dovish commentary from the BOJ, which is a good thing if you are bearish, simply because you know, market dismissing such news shows that the market is really heavy. And what I'm viewing this as quite likely being a triangle just below there. So as Blake said, I also see a very high potential of a breach below the 61.8 in the next retest, which might even be today or tomorrow, with the next stop being at just below 109, and the ultimate target of the head and shoulders as well being down at the 107.30, which is also the low we found in the middle of September. So that would be a very nice technical level to go and retest. Okay. So let's see what else has moved today, so we can talk from there. And obviously, I'm going to take questions. Let me see. We already have some. Okay, Blake answered that. Blake told us everyone is bullish for USD. Click at this sentiment. Let me see. Whoops, sorry. That was a link I shared before. Obviously didn't copy. Let me take it again. Copy. Let me switch to English. Yeah, but this is not sentiment. I'm guessing. Yeah, I'll tell you. Let me guess what we're seeing here. We are probably seeing here positioning, right? Positioning on a specific broker. The problem with that, my friend, is that unfortunately, the vast majority of retail clients are always trying to fight the trend, and the vast majority of them don't even know when to fight the trend, because I'm absolutely not against trading counter trend. I do it quite often. But you see, for example, that retail traders are positioned all the way to an uptrend, they're positioned being short, and all the way to a downtrend, they're positioned to be long. And in essence, retail traders and brokers are only right during the turn. And soon after, when something turns, they take the exact opposite positioning, because the basic human psychology is something that drops, you consider it suddenly to be cheap and you want to buy it, and something that appreciates, you consider it expensive and you want to sell it. So that's probably positioning in a specific broker, which really doesn't surprise me. Being so few people long, actually, that's probably a better indication that there is more upside left here. Yeah, it's broker sentiment. Yeah, but broker sentiment comes out of how their clients are positioned. FXCM has the same, other brokers have the same, and you'll see what I'm telling you, that retail clients, the vast majority of retail clients, are always trying to fight the trend. And when I say always, unfortunately, I mean always and constantly. You might have a move, let's say, a 10% move, and at least 8% of that move, retail clients are looking the other way. Okay, gold. Let's have a look at gold because we have a question about it. So trust me, retail clients, to finish up what we were saying, retail clients are only a small portion of the money, a very, very small portion of the money being invested in the financial markets. So they don't really matter. I mean, they don't represent sentiment having to do with how much money backs what. You know what I mean? So you have to keep that in mind. Okay, I'm still short gold, although I reduced my position when we had this beautiful down day there at almost no cost. And the reason I did that was, first of all, because this area is support, and the reason why I'm a little bit skeptical about gold, that it might have one more push to the upside before going lower, is the fact that I see the potential of this being a triangle, right? You can see it here. We had a little triangle there, we broke above it, and this has started looking like a triangle as well. Of course, we might roll over from here and accelerate, but since the prior move was higher, regardless of what kind of a position I have, one thing I've learned over the years is to try to be objective when I'm monitoring a market, and I can tell you that as a structure, this tells me that there is a decent, more than decent potential of another push to the upside before seeing a deeper correction lower. Okay, we did actually manage to break this steep ascending channel, but the slow-moving consolidating price action, usually gets resolved in the direction of the prior move, the prior trend, in this case upwards. So another push, especially if we spend a few more days like chopping around here, another push towards the 1350 area would really come as no surprise to me. Okay, that's what I see in gold. And as you see, I have no problem not talking in my book, right? Because we are here to examine the markets, and objectively, even when you take a position, you need to not let that cloud your point of view and whatever you see in a technical chart, because obviously just by trying to see what you're hoping you're going to find is not a viable method of trading. Silver obviously doesn't look as bullish as gold does, because obviously in this case, at the best case scenario, we have what looks like being an expanding triangle, like a megaphone formation. But on the other hand, it definitely hasn't broken below, right? It definitely hasn't broken lower. Even if it does, 1670 could act as support, so that wouldn't surprise me. But the more the price action remains choppy as well here, and we don't really accelerate to the downside, another move higher here as well is possible towards the 1780 area. Yeah, Dale?
Down there, Steve, it would look like a right shoulder possibly.
Yeah, I've seen that already, but I try usually to refrain from seeing like complex formations, like head and shoulders formation, when there is. I took us down to the 4-hour chart. I've already seen that. I didn't mention it intentionally because I don't want to give like confirmation bias to people that might be looking for a reversal now, because yeah, for this to even be a head and shoulders formation, we are completely missing one shoulder for now.
Oh, I was
Completely.
talking about a head and shoulders bottom off your daily, that a break down there.
Sorry, I thought
right shoulder.
Okay. I thought, let me see what you're saying, because I thought because I have already this that there is some kind of a potential, for a little rebound here.
I didn't even see that. So yeah.
Yeah. Okay. Sorry. I thought that's what you meant. So this is.
Look to the left of the low. You had that complex action, and and then you have the head, and maybe we're making a right
shoulder, head, and shoulder. Yeah, it can be. It can be. In which case, in which case, the neckline would be somewhere there, right? Somewhere there, something like that.
Just straight across recent highs.
There, somewhere there.
Well, it's hard to tell you where to draw the line, but anyway.
Yeah, it's not beautiful, but there is the potential. So we're talking about this.
Oh, I didn't even see that one either. Okay. And I think there's one within one. The right shoulder is a fractal putting in, if it breaks. That'll be
like this. Like this. Yeah. So, as I've told you, regardless that I'm currently.
You found two head and shoulders I hadn't even seen.
You know how it is. After seeing charts all day long, the eye gets very acquainted, and so you spot things like on the flights. It's like training. I mean, and that's something that depends on the time frame you're looking at. Everybody can learn to do, because I've said that a lot of times. You can really learn how to make a living out of trading, etc. But you need to be patient. You need to have a method, and you need to invest the time. Things don't happen on their own, right? So and you need to have the mental capacity and the discipline to do these things. And you need to be patient, because as Dale, I think you said it the best way. How have you said it? That it's a hard way to make an easy buck.
Oh yeah, yeah. A veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck."
Yeah, exactly. That's exactly what's the case.
And also, guys, only use risk capital. I used to, as a broker, tell people, imagine the check that you're funding the account with, strike a match and light that check up. And if that makes you nervous, it's not risk capital.
Yeah, and for our friend Mazed that says that I'm that I seem to be, yeah, I'm negative gold in the short term. I actually just to be, for full disclosure, I have actually accumulated an okay amount of physical gold. I do believe in gold and silver appreciating, and I do believe that they will appreciate quite a lot, especially when the next crisis comes, right? But I see, as I told you, I try to keep the time frames separated, right? The fact that I believe in a long-term appreciation of gold doesn't mean that, for example, I'm not troubled by the divergence I see between yields and the price of gold at the moment, and the fact, for example, that I believe that the dollar should sooner rather than later post some kind of a rebound, etc. So I have technical reasons to, in the short term, be looking for a turn in gold for a move down lower towards 1300.
You have any coins from the Roman Empire? Gold coins from the days?
No. I only British golden.
And where do you keep them in your house?
I can't even disclose where I keep them, actually, as you understand.
Just in case I visit you someday. All right, thanks, Steve.
No, you won't find them in my house, if that makes you feel better. Okay. Yeah, that's what
I've been to his house and I've looked and I haven't found it. So.
Yes, Dale?
Thanks.
I said I've been.
So they're either well hidden or not yet.
Exactly.
Dude, same thing. You know how many times I've searched for your gold coins when I was at your house. I'm really disappointed. You must be hiding them very well.
We have
Coffee
the same.
can buried in the backyard.
Yeah, we have the same mindset on that. Actually, I agree with you 100%.
Ziggy says that you should check my teeth. Like the pirates. Okay, so let's see what questions we have before Lydia. I'm not going to look at the pound pairs, guys, because Lydia is going to be with us. She's the pound queen, so she's going to check everything for you. Okay, Aussie yen made the move and now pulling back a little. Let's see. Let's have a look at Aussie yen. Okay, so the Aussie yen still has some potential, right? With emphasis on some, still has some potential of putting a double top here. But, you know, for me to even say that's the case, I need to see a break below this low, okay? Obviously, today is a very big candle. It's an outside black candle. It's quite a bearish day. There's no question about it. And you know, the rejection once again from the 89 area is a nice signal. But in my opinion, don't jump the gun. I mean, don't go all in. It is though a decent day, and you know, pullbacks probably towards 88.40 should find a new selling interest. And I see quite likely that, you know, we're going to come at least down and retest this low. So I think that if you're looking to trade it short term, selling at 88.40 with stop loss above the highs is a decently high probability trade to be looking then for a move like what is it, 110, 120 pips lower. So, you know, the reward to risk ratio is going to be definitely more than one to one. Okay. So that's what I see with the Aussie yen. Now let's have a look at the Kiwi yen. I was looking for a new high in the Kiwi yen, as you can see here, as a potential of this being a triangle. We did get it actually intraday, as you see. Now I would have wanted it to be larger, to be, you know, to be actually confident that that was the last thrust higher. So I would have liked to see a move like towards, you know, the 82 area. Now, obviously, if this proves to be a false break higher, which we will need at least a couple more days of price action to say with certainty, you know, that's going to be a bearish development as well. But as I said, I would have liked to see, you know, a little bit higher prices than this. To feel more confident that we had a triangle, we broke above it for one last push, then reversed. Keep in mind also that we have nice RSI divergence here. It's very nice, and what I call reliable RSI divergence, meaning that the first high was clearly above 70. The next high that and for now is giving us a rejection is clearly below 70, right? So this is a nice RSI divergence, but as I said, we need a couple of more days of price action to confirm that this is not just a short-term pullback before this last leg unfolds to the upside. Let me see. Can you double check 4-hour symmetric triangle broken gold and interpretations, but there is no momentum? Oh yeah, you said that prior. Let me go. On the daily chart at least, taking these two peaks, I don't see a triangle being broken. I still see us being within the triangle. Even if I go down to the 4-hour chart, I don't think that's going to change much. Yep, there it is. You see? So I don't think we've broken above it yet, mate. Eric says like X marks the spot having to do with gold. To short, swap is positive. Let me see. We looked at it yesterday. Yeah, that's what I said yesterday as well. I think that this should have most likely one more leg to the downside, at the very least. I mean, if we consider this being one more corrective move lower, which initially, since we are in a very, very strong uptrend, let me zoom out so you can get it in context. Just look at this. This is a so well-defined and prolonged uptrend that, you know, just imagine how many times you could have tried to fight the trend and how many times that would have gone against you. But even viewing this as a potential correction, which is the first thing we should be doing in a strong uptrend, I mean, viewing any kind of move lower as a correction, it still misses one leg. I agree with you. It should come down to at least 360 little, if not, let's say, lower to retest perhaps this ascending trend line. Okay, so I agree with you. I do see the potential for one more leg lower, and it's quite high because this is so clearly from a structure a corrective move. Just look at it. Tap, 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 tap. Bear flag in this case, right? So I would say that a break below 376, 375, you know, confirms that another leg lower has started. I think that will be a confirmation to you. Okay, let's see what else. Any more questions that we have? By the way, let me see. Yep, USD yen is doing the move actually as we speak. Of you know, although this is not a confirmed triangle, I mean, it can end up being something like this. But I really believe that, especially after the rejection from the BOJ, regardless of what kind of structure this is, I do believe that this time the 61.8 has very little chance of holding, and another leg to the downside should happen. You know, I see it as a quite probable scenario. Only the fact that we failed to make a new high in this sequence of lower lows, despite the BOJ being dovish, you know, should tell you more or less everything you want to know. Euro Kiwi and Pound Kiwi. Luca asks, okay. No, we didn't cover them, but I'm not going to cover Pound Kiwi because Lydia is going to be with us in 8 minutes. She's going to cover all the pound crosses, so I'm going to let her do that. But definitely we can have a look at the Euro Kiwi together. I don't want to steal her thunder. More or less what we said yesterday still applies, right? As long as we remain above here and above the ascending trend line, a potential for one more push to the upside towards 170, 140 is a probability, but we shouldn't penetrate this low. Ideally, we shouldn't even penetrate this ascending channel support. So if this is to begin, it should do so, you know, rather soon. Otherwise, it means that the correction is not over yet, which isn't going to be logical because keep in mind that even from a time perspective, this is an uptrend that started February, first few days of February 2017. The move higher was taking place until the first day of December. So multi-month uptrend, which can easily take a little bit longer to finish up a corrective move, right? Because usually, ideally, you want to see corrections have a decent percentage of price retracement and time retracement, usually. So for example, if you have in this case we had a 10-month uptrend, you know, taking 2 months or 2.5 or 3 months for a corrective move is something that absolutely makes sense. I mean, it shouldn't really trouble you, right? In combination, of course, with how much of a retracement you're expecting. So in this case, we have 10 months of an uptrend. We are now 1.5 months in a corrective move, and we're not even sure about that because the low, which there is a probability, then it was simply 40 days of a corrective move lower, right? And let's see how much price has retraced. You see, it didn't even reach the 38.2, which means that I cannot call this a confirmed end of a correction lower, simply because a correction lower can unfold more in price and more in time than it has already done so, without really changing the fact that this is an uptrend. Okay, so be a little bit careful, and that applies to all the crosses. I said it yesterday as well. I mean, Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. You should allow for a little bit more price action instead of trying to call a bottom, you know, a little bit too hasty, because you might have a lot of false indications and false starts, and then you'll have to try again and again. USD-MXN seems to have posted another higher low, yet I fancy seeing it in 19 and shorting weekly. Okay, let's have a look at it. I was looking at it actually before, not on the webinar, I mean. Okay, listen, this is USD-MXN. I believe that there is a high probability that this was a correct move higher that is over, right? And that there is at least one more leg to the downside. I mean, on the longer term, one more leg to the downside. So to begin with, I'm viewing any bounce from here as a corrective bounce, as long as we remain roughly below, let's call it 1930. So I agree with you on your first thesis that you want to short bounces. I agree with you. So, you know, there is a chance we get rejected from here because I'm monitoring this steep descending channel. There is a chance that we move a little bit higher towards 1920. But in either case, I would still be looking to the downside, because I believe the break below this ascending trend line is an important one, because if you zoom out, this is a very well-defined and strong uptrend, which most likely has given us an A. This was a B, and I would expect another move lower, like a C or something like that. So at least this is my initial approach to the trade for now. So I'm with you. Shorting bounces is, until proven otherwise, is the way to approach this market. Yeah, my pleasure, mate. Dale?
Yes, Steve.
Is Lydia here?
She is.
Perfect. Okay, then I'm going to pass the baton and let her show us what she thinks about pound and whatever else she wants to talk about. Enjoy the interview.
They're always great interviews with Lydia. So
I know. I've heard most of them. When I had the ability, I stayed to listen to most of them.
okay, she's my trading warrior sister. And hi, Lydia. I'm going to pass you the baton here, make you the presenter. Thank you so much for stepping into the void for me today.
Hey, Dale, good morning.
Happy New Year, Lydia. Is it too late for me to wish you Happy New Year?
Absolutely not. We haven't spoken yet, so it's still valid.
All right. Well, Happy New Year, and I hope that you have a great 2018. And thank you so much for, on such short notice, coming in. And what a great time to have you, you know, Providence, with what the pound's been doing, breaking out the new highs. Very interested in what your eyeballs are seeing here, my trading warrior sister. What's going on?
Thank you so much for having me. So, yeah, let's start with cable. Cable was really interesting last week. We broke the 618 of this, basically this Brexit down move. This is the Fibonacci from the Brexit vote to the lows at 1950 here on this chart. Different brokers have a different low here. But if you take this fib, we cracked it last week, and today we've just had this breakout higher. And I've been watching this fib. I think many of us have been watching this fib as we've been around $1.35, which is right around this 50 line. And as we've had these kind of some lower lows since really breaking out in September, and we've been struggling to get a little bit higher here until probably around December, when we started to hear that Brexit was going to be softer. As we started to get news, right, that would lend to a softer Brexit, the pound has been powering higher. And really, I think last week it was when the Dutch and Spanish banks said they were in favor of a Brexit, a soft Brexit, or something along those lines. But this week we just we got a crack above this 38.39 with the high at 39.45. But this week we've continued on higher. So this is the overall structure.
I know, Lydia, you and I and a lot of pros know the difference between a soft and a hard Brexit. But for those who don't, can you just give a quick synopsis of what would be a soft one and what would be a hard one?
Sure. So a hard Brexit would be like an exit from the EU across everything: business, financial lines, banking, trade. They would be completely separate countries. They wouldn't be in the European Union, the trading bloc, versus a soft Brexit where they separate, you know, geographically, maybe some trading agreements would still remain in place. So they would still benefit in some areas. Let's say in finance, like the banking system would still operate as an EU bloc, but all other industries would still be, you know, separate regions and therefore need separate agreements. So a soft Brexit means they have some benefits of being in the EU bloc without being under all the restrictions or requirements necessary to truly be a part of the EU.
Is part of it also immigration? And wasn't that part of the rationale for people opting to vote for a Brexit? Is they didn't want to be under EU's guidance for immigration into their country?
Right. So I think that anything that has to do with business, with business agreements not being severed, is a softer Brexit. I think the immigration issue is where I think an immigration issue is part of the Brexit, right? But anything that where business and exports and industry is not being separated from the EU is where we've been starting to hear soft Brexit. So I think really a soft Brexit is where, you know, we want our industry, we want business to remain in the EU, but we want everything to be hard Brexit, like and immigration is a big one. When I say geographically, immigration.
Yeah. Interesting how that's echoing across the globe of people wanting to control.
Yeah, well, there's that wave of populism that we've been seeing since, since 2016, rolling really across the globe. Brexit was a big surprise. You know, our new president's election was a big surprise. President Trump's election was a big surprise. I think France was the one. Remember when France, Macron was elected and the euro skyrocketed because he wasn't a populist. He wasn't a populist candidate, and so the euro. That's when euro started to get some steam and starts to head towards 120, but against the dollar. But yeah,
okay. So let's say someone just opened their an FX account, and they're looking at the pound here, and I know you mentor people, and say for example, I'm assuming you have with this breakout you have a bullish bias. How would you mentor somebody for looking for an entry into the pound on the long side here?
Great question. So their entries have been really tough. So looking at the daily chart, you know, clearly this has been the breakout and there hasn't been an entry here. But if we go into intraday chart, I've been, my standard, it's not even advice, my standard rule is to wait for the correction. And that there are times, particularly in the pound, where we're gonna see these things grind higher. And this has been grinding higher for 2 weeks. We haven't seen a real correction. So you've seen, I've been drawing this since 2 Fridays ago on January 10th, where we got the correction low here. after this move, and I've just been drawing my fib higher, so I haven't even extended it for this week. There is no real entry until 137.94 or 138, and that's what I would tell newbies. I would say you wait for the correction. When you don't think that the pound is going to correct, the pound corrects, and then it corrects deeply. It will correct to like the 50% mark when you didn't think it was going to correct. And so that would be my advice for those who, you know, have a little bit more trading experience. If we take this back a bit, what I've been doing over the last couple of weeks, well, maybe the last several days, probably around Tuesday, Wednesday, Thursday, last week, you can draw these smaller fibs. So we had this move here to here. And if you zoom in on this, let's take this larger one out of the way. But if you take a smaller move, the move during the week, then you see that this dip here was actually a great correction and a great entry into 38.50. Actually opened the week this week with a gap up. I'll even come in on a 60-minute chart. So this was our gap up at the beginning of the week, and we had that gap fill, but we were really nicely in this fib. So we broke out. We didn't broke up. We gap filled. We filled the gap, stayed in the fibs, danced around here, and then broke out higher. And so what I teach my students, so we can now draw this fib here, and we're looking at today's dip now. Today's dip is right into the 50. Boom, or it was. You'd be chasing it a bit now if you got in now at 39.50, but it dipped early about 8 hours ago. It dipped into 139. That was a move higher too. So you can zoom in. And these ones are, so you can zoom in. I'll just say you can zoom in and take the intraday moves and put fibs on those to get a setup.
Okay. So to be a more active trader, experienced trader, you could drill down to shorter time frames and trade those fibs instead of the larger time frame fibs.
Yes, and I want to emphasize Dale's caveat there. The experienced traders should drill in on these shorter time frames to do this, because as we know, like I just said before, the pound can correct, and it can correct hard. And so these can give you maybe a signal that's too fast or even too noisy. So I will give those disclaimers.
Okay, Lydia. So is there any major news or catalysts coming in the pound? I know we have ECB this week. You're looking for any kind of fundamental developments that could either generate acceleration or create a pullback here fundamentally?
No, so I'm not looking for anything that's not already on the calendar, right? So yeah, so I have, some people will try to say, well, what if they announce this? And we don't trade like that. We trade technicals, and we let fundamentals guide our direction. And so I think I would be surprised, and I think most of the market would be surprised to hear anything that would hint towards a hard Brexit at this point. I think that according to the weekly chart, I think we're on our way back to 150, and really pleased to see that the breakout actually took us to $1.40. This is a natural turnaround at $1.40. We should get this dip. I'd like to see a dip of this entire breakout move personally. I think that would be a great setup. As we try to plow towards 150. I think that's ultimately where this pound is headed. It's basically a reversal of this down move.
Okay.
We're at the very beginnings of that now. So speaking of the ECB, looking into the euro here, the biggest, like I said, when we talked politics a bit, euro is able to get some steam, and then some other things help to keep the rally going in the euro. Against the pound, however, we've been struggling because the dollar has been weak. So the pound has been strong against the dollar, and the euro has been strong against the dollar, which has made it really difficult to trade the euro pound the last several weeks. So we've been dancing around 88.50, which is a major support resistance line for the pound. the euro pound in general, if you go back months on a monthly chart, you'll see that we really, it's a deciding point as to whether we break out when we're at these highs or at these levels, or if we break down. And I'm contending that the euro pound is turning bearish right now. I like that it has finally broken down out of this kind of congestion around 88.50, and that we've broken down. You see, I've been trying to see what it's going to do, if it's going to turn higher or lower. So I know I have a fib here, and I had been trying to play it higher because we, for several reasons, last week, trying to buy these bottoms at 88.50, just kept getting stopped out at break even. Every time we shot higher towards 88.50, I'd move my stop up, have some pips, and you know, it would turn around on me. So I didn't get into this move today. Honestly, I've been so busy with the States. We can get into that later, but I have not. I've been watching markets. I haven't traded. I can admit that I've missed these moves, and so I am, as I'm talking to you, Dale, and talking to you all, I'm also looking for entries as well. So we look at the euro pound, you know, this nice break of the 61.8 will say, okay, we're returning back to these 86 highs, 86 to 87 lows, a break below 87. And, you know, we have this great level of support. It's a nice zone of support at 87, right around 87.50. And, you know, 87, between 87.60 and 87.40, but this is a zone of support that's been in place all of last quarter of last year, since September, since we dropped into these lows back in September, and we're here again. And so just like we looked at the pound, but you know, this one is a little less noisier because around a 4-hour chart, we had that pop a couple hours ago that took us right into the fib, right? And so we're looking for entries to short this. But you need to be careful, be cognizant of this zone. We've seen the euro pound turn around several times. The ECB is this week. Draghi, could be that Draghi, you know, talks the euro up or down. I mean, who knows? The sentiment around monetary policies around the world from our major central banks is different. It's hawkish now, right? And so we have central bank governors who are trying to temper a hawkish attitude or hawkish sentiment, or not. Some of them have been blatantly hawkish, like the Bank of Canada was back in November or whatever it was, the October, where they hiked right after their July hike. And then this time around, they hiked again, but they try to temper it. So I think, you know, we're seeing a lot of hawkishness, and it depends. You don't assume that that's an automatic bullish reaction in the currency. So like we saw last week, Bank of Canada raised rates, and we'll look at the pound CAD. It's just been powering higher on the back of Canadian dollar. Well, probably on the back of pound strength, but there's been some Canadian dollar weakness in there as well. So right now, you know, I wouldn't say you could short the euro pound here. I would say you're chasing it a bit. Your opportunity was more up into the fib at 87.92. But watch this area, especially as we head into the ECB release. It is very likely that the euro sells off into that release, which then makes you wonder if we rally. I would contend that if we do rally during the ECB press conference, that it would be met with a lot of offers. So
okay, sell strength on sell rallies.
I would sell rallies. I think the pound is still strong here against the euro.
Okay, thank you.
I know a lot of you look at the yen, so let me just jump to the yen before I go to the CAD. So on the weekly chart, I've just been watching this thing correct, and I've been saying it, and I think a lot of you are saying it here, is that 148 was that line where we saw resistance, and then we saw a bunch of support, and this thing has just taken off since they're really in these dips lower of 147. Was when I started to catch the wave higher and just kind of scale in, scale out, scale in, scale out, all the way up and through last week. So we're having this move, this correction, right? This correction of this down move. Still grinding higher, and so I do think this thing is headed towards 160. I don't think that's out of the question, especially now that as we hit 155. I think this thing can still move higher. But obviously nothing moves in a straight line, so we hit 155 and we got this immediate turnaround. So you can see this is my overall play. This is back in August, September, this bigger move here. This one is, let me move it for quickly. So what I just want to show is the 123 extensions up here at 156. I've been looking at 156 for months, for several months, waiting for this thing to hit 156. And I've just been scaling in and out. Grabbing 100 pips here, 50 pips there, 150 where you can, right? I've just been grinding in and out, and I missed this dip last week. So that's probably the first time in months I hadn't been in the pound yen. This thing moving higher, and it got close to the target, right? At 155 is a pretty good move, especially when we came in at it from 147. So that's a stellar move, especially for the pound yen. Put this fib back on just to show again another illustration, like what do you do if you miss this move? We got this severe down move 2 weeks ago into 150, and then we've been back higher. So looking at it today, or looking at it for this week, you know, we hit 155.40 and we dropped, boom, and we made a nice correction into 153. And, you know, that basically this morning has been a morning of corrections. And so, like I say, I love to tell my students, you know, the pound always corrects. I don't care how long it takes, it always corrects. So don't get impatient. Wait for the setup. Wait for the setup. The pound always corrects. So this thing is going to move, going to attempt to move higher. I don't tend to like to look at it this way. I think at the top of the week, this goes back to the daily chart where it's clean. I think at the top of the week, I would just like to see what is the fib on the whole move here. And so that's where I would be trying to look at. Maybe we get another stab lower into 153.40, but this looks like a pretty decent correction. Oops, let me get that fib off. But this looks like a pretty decent correction. And I only say this because this, if we look at this correction here, this up move here has obviously been reversed. And it's working on a complete reversal, but it's been reversed. And so when you have a wave or an uptrend that moves as a wave, where you're getting a move higher and a correction that respects the fibs, and you're just grinding that way, a move higher, a correction that respects the fibs. When you get a move higher and you get a violation in the fibs, you can expect a bit of a deeper correction. So that's why I would say, you know, this looks like a great setup. If you're in, great, you know, protect yourself with proper trade management. But know that this is this entire move is likely to correct, and is likely to correct after such a deep correction earlier this morning. So I would just be cognizant. I wouldn't chase this. If we're above 154, it's not a long I would be interested in.
So could it be as deep, take out 53 and go to where your moving averages are coming together around 152, which might be a fib of the whole move?
Yeah, I think 153 is a good area.
Okay.
Yeah, because we're looking at this whole thing. Yep, I would say 153. Is it through here? And yeah, your 61.8 is coming in here. So just all this area. If you're going into 152, you want to watch for a hold, especially of these lows, past lows. So we'll see. I think 153 is a great area because that's a former low. So 153.50 is another former high, another former high. So yes, Dale, to answer your question.
Okay.
I'd say so.
Mm-hmm. Okay.
So just mentioned the CAD and its grind higher. And I think this scenario is true for, if we look at the commodity dollars, just kind of looking at them as a commodity dollar block, unlike the other pound pairs where we've seen significant correction of that Brexit move, we haven't been seeing that against commodity dollars. And so, you know, we have strength in the commodity dollars, but they've been showing some weakness against the pound. So, you know, the pound has just been particularly strong for some of the fundamental reasons you've mentioned. So this one is just a great fib move. If we just look at this move over the last I guess the last quarter of last year. And again, it's been a grind. It hasn't been anything pretty. It looks pretty now, especially on the weekly chart, but it's been a grind. So this is that move. It's been a grind higher, and we're finally getting back to highs. You know, for me, a fib setup has to make new highs. We have support here, which are former highs and a kind of a former breakout area of support. So you want to watch 75.42 on the pound CAD, and really the target on this fib move that this is a zoom in on the daily, but we saw it on the weekly. 178.50 is where this thing is headed if we don't get resistance at 175. So that's where this is headed. You see, I've been trying to catch this. And it's just been choppy. It hasn't been as much of a grind as, say, the pound a dollar. But if we just draw the initial move, you see that these corrections have really been short of the fib.
So I've interviewed you. Yeah, I've interviewed you. I don't know how many times, Lydia, but I noticed something today. I don't think I've ever asked you about it. I've seen it on a few charts. Mm-hmm. It looks like your objective work, your targets, you use a 1.23 a lot. Is that, how did you come up with 1.23 as a fib extension for objectives? And am I reading it correctly that you use that for targeting moves to both the upside and downside?
Yes, I do use that extension, 123. I've been using it. So I mean, I just think I've just in the evolution of my work with fibs and looking to see, like, where does this go? So after we correct, does this have a particular area that it goes to? And it's not obviously it's not a science, right? Okay. I say that it heads towards that level. Okay. Hold it past the new high. You can tend to feel like you can hold it. Obviously being aware of whatever support and resistance. But it's a level I've picked up from other traders, other older, more experienced traders. And then I've always heard Nick say that a step with me is like the 161.8 is where we could see a trend end. So I've always just kind of looked at 161.8 for that particular reason, just to see if that is the case, in any particular move, not for truth or validity, but just to say, okay, if it gets to 161.8, let's see what happens. And I mean, I would contend that she's correct in that. So it's just something you look for. But I mean, admittedly, it's, older and more experienced traders had pointed out these extensions, and I've just looked at them over time in my work and said, oh, this is a nice conservative target, as opposed to kind of guessing which new high you should take profits on, after. Nice.
Yeah, and if it isn't broken, don't fix it.
Yeah,
Okay. Exactly. I was just curious, and great reason, and 1.618, the golden ratio. And I work with Nick. I didn't know that she said that, so I learned something new there too.
Yeah, I've heard her say it a couple of times. Yeah, so it's just something I've always just looked at or looked for. But
can you just switch? I know they're probably pretty similar, but someone was asking about pound kiwi earlier.
Sure. Yes. Pound kiwi. Yeah. So like I said, same look. I think that last time it was on, we were looking for it to hit to 98.50, which was the 61.8 line. It came right into that 61.8, and it's dropped since. I'm sure you guys have all talked about it. So I have been looking, like most of us, just watching to see where we get in here. So just coming in on a 4-hour. This is in the same case as the CAD. It's just been, and the pound, dollar, or cable. It's just been grinding higher. And really, I've been several weeks ago, I think 2 weeks ago now, at the top of the month, I have been getting in against the support zone here, the loose support zone at between 89.62 and 89.31. And I just been shook out. You see all this choppiness that we get shaken out, and then this thing's just been grinding higher. So I've not been in this trade because there has been no fib correction. So like in anything, I wait for the fib setup, and if I don't get it, then I can't trade it. But I think that this one is still bullish, even after this great correction, after hitting that high there. But it does have to prove itself, because right now it's been It's really not taking off with pound strength as you would expect with all the pound strength that we're having in the market. Many of I think all the Canadian dollar, Australian dollar, New Zealand dollar, they've all been very much not moving with the same amount of momentum as some of the other pound pairs have. So it's been tough to get long this one just because of that reason. I think that the commodity dollars should be stronger than they've been exhibiting against the pound. We've seen some strength in some of the commodities as well. So I think it's tough to get long. I think I would have a hard time getting long if it broke this support level, even though it's in the fibs. Just because fundamentally there's not the fundamentals don't truly support weakness in the New Zealand dollar here in particular. But you follow the trend. The trend is definitely to the upside, and this is where I would wait to get in short, probably even at the 38.2 with a tight stop. And see if this can move higher. What you're really looking for, swing traders are really looking for this move to break above 98.50. Basically, that's your fib move.
Okay.
Here. Yeah.
Well, you did it again, Lydia. Another interview chocked full of targets and numbers and fibs. Great presentation. Why don't you take the time now to show people how they could get a hold of you and what your business models are, and you don't have to talk about the state. I know how regulated.
So my blog is, thanks Dale, thank you so much. So the blog is faithmightfx.com, but I talk about a lot of different things, as long as it's market related, right? And so so I have several students now. They've come to me through my course. You can find more information at Here Learn with Lydia. And if you're interested in asset management or investment advice along your greater portfolio, not just Forex, you can find out more information about the RIA with Invest with Lydia. So I just, direct everyone here. Check out my latest posts on the cryptos. I've actually had several DMs asking me to post more charts in this asset or in this particular Forex, right? So I've definitely will look to do so. This year I'll post a couple crypto charts. I've been loving watching.
Have you personally done any crypto trades? Have you tried it?
Of course, Dale. I'm a trader.
Okay. I haven't. All right. All right. So you're expanding into this new asset class. So
yeah, I mean, the technical analysis here has just been a beaut. It's just pure buying and selling. We don't have algo, we don't have futures, we don't have any, it's just so pure right now that if you're a technical analyst, I think how can you not look at cryptocurrencies and looking at the price action at any of these
great
coins.
argument. Yeah, so don't let the volatility scare you, because technically it's still a classic raw pure market.
Absolutely. I mean, if the volatility scares you, just stay away. There's other asset classes to trade. But I mean, just as a technical analyst, a student of fib, it's gorgeous. It's just been very, very pure.
I mean, double ARP has come out and endorsed FX trading because crypto's so wild. So they're approving FX trading for senior citizens now.
So people out of cryptos, that's funny.
Thank you so much, Lydia, for being here with us today. Everyone, you could follow Lydia on Twitter at FaithMight. Check out her website, FaithMightFX. And really, I know I said Happy New Year. I hope it is a great year for you and every endeavor and everyone who you touch and bless with your knowledge, Lydia. Thank you for your time today.
Dale, thank you so much. I really appreciate it. Happy New Year to you. Great 2018. Cheers to 2018. And I look forward to seeing you in the streams and being back on with you all again soon.
Okay, Lydia. Thank you very much, my trading warrior sister, Lydia Idem Finkley.
Thank
all right,
you.
Faith, let's turn around Tuesday. I'll see everyone tomorrow. Good hunting the rest of the day. And remember, most of all, don't just count your pips, count your blessings. And working with you and the team at FA is definitely a blessing in my life. Thank you again, Lydia. Our friendship is as well. Adios.